Okay, well, let's get started because one thing obviously is that these are recorded. Um, so if you're not here and you're watching this, then obviously you weren't here and you're watching this. But for those that are here, thank you again for joining us. It's May 28th. It's about to be June. We're getting close to the middle of the year, which is wild. But here we are. So let's have a look at a few things. I know Tony's going to share with us today, just kind of some market updates, and Sam has a couple of updates for us also. So um, yeah, we've got some market updates, some service updates from Sam. I'm going to give you a couple of marketing updates, and then as always, we're going to have a time of questions and answers. For us, selfishly, that's kind of our favorite time. It kind of puts everyone to the test. I know that Daniel loves that, Zach, Tony too. We're always excited about that kind of thing. So, as you are listening and paying full attention, obviously, to everything that's been shared on the call, I would encourage you to write down some questions, be thinking about what it is that maybe you want to ask and figure out while you're on the call. Apparently, I'm giving thumbs up already. So with that, I'm gonna kind of hand over to Tony here. I will drive these slides for you, Tony, but the floor is yours.
All right, thanks, Tom. Let's go ahead and jump right in with the first slide. The pretty much green across the board. All of our short-term and intermediate-term indicators are all long-term indicators that Delta V equities is still negative, and it is rising, but not very close to an imminent trend change. And we'll have some more on that in a little bit. The at the end of at our last webinar at the end of last month, mostly defensives and things like consumer staples, utilities, internationals, which traditionally are not defensive, but in this case have been. They dominated the top of the rankings. Fast forward to yesterday's close, and we see a few changes taking place, pretty significant. Consumer staples are down to number seventh now, and also we got large cap growth that's popped into the picture, as well as the NASDAQ 100. So we're starting to see risk appetite definitely re-entering the market, which isn't a surprise given the rally we've seen. Next one. As well as what we would expect, cash was ranked third at the end of April, and now it's dropped down to the middle of the pack. So we're seeing quite a swath of the market that's now showing positive uptrends. Next one. The 580 level on SPY is pretty much a critical level. I've drawn a yellow horizontal line there. I've circled where it was resistance coming into the end of last year. The market hit the resistance level, dropped, popped above it, fell back to it, bounced. And all these recurring trips to the 580 level just shows that that's a very comfortable area for investors where both buyers and sellers are think the value is. So recently we've popped above it again. We fell back to it on the far right of the screen, and we're trying to inch away from it right now. This chart, I believe, is from last night as well. So once we get a sustained uptrend, upbreak away from 580, I think the skies will turn a little bit more blue for a rally to new highs. Next. This is a very positive development. VIX is back below 20, as we talked about last month. Bad things happen in the market whenever VIX is above 30. And that's a chart going all the way back to 2007. And you can see very easy to spot the financial crisis, COVID, fall of 2018, a lot of the areas, and then earlier this year too, where we saw significant market distress. So as investors, as traders, we like volatility. As investors, we don't. So whenever we're below 20, it's a good thing. We're hoping to see the market quiet down and then resume a sustained uptrend. Next. This is a look at market breadth of both the S&P 500 and the Russell 1000. And we're looking at the percentage of stocks above their 20-day moving average and their 50-day moving average for each of the S&P 500 and the Russell 1000. So in the middle of the chart, you can see the market was topping out, not much positive price progression, and then internals started to weaken. So you got some red down arrows in the middle of the chart. And then that was pretty much a precursor to the weakness that ended up happening. Once it started into the free fall, there was very few stocks that were above their 20 or 50-day moving averages. So that histogram basically fell to zero. The yellow lines are the 50 mark. So whenever it's above the yellow lines, it's more than half of the stocks are in uptrends. So the red arrows on the right-hand side in late April, they show percentage of stocks above their short-term moving averages are starting to rise and increase, and then the market is increasing as well. So as long as this stays above the 50 line on most of these, then that's also a positive sign. So short-term, things look pretty good by all the measures that we've examined so far. Next one, please. Similar story with the cap weighted Russell 1000 IWB and versus the equal weight Russell 1000, which is the purple line. They've been tracking well together through the uptrend, which means that that basically the troops are following the generals, so to speak. We are seeing just a little bit of outperformance in the last probably week or two, where market cap is starting to pull away from equal weight, which is okay. That's to be expected. The leaders are starting to take control again, as we've seen in the earlier slides. Next one, please. This is just a quick look at one of the short-term indicators. This is one of the three newest indicators that we have in the arsenal. It's Starflux Long Short. This one was the first to exit the market on the downtrend and also the first to re-enter when it began to recover. And this is kind of a precursor for the next slide, please, Tom. Okay, if you're not using this, I suggest that you look at it and examine it pretty frequently. The SPL exit strategies timeline is in the portfolio toolkit beneath. When you run Sam, maybe at some point you can kind of show where they can find this at, but it's once you create a blend and examine it in the PTK, you can find this timeline. And when you open it up, go back, please. Or go forward, I guess. Yeah, right here. Okay, so real quick at a high level glance, you can see the activity of each one of the indicators, and you can choose based probably most likely on your client activity, tolerance, things like that, which one of these indicators is going to be most probably fit their risk appetite best. You can see at the very bottom, Delta V has only had 2 trades during this time period over the last 3 years, while the Star Fluxes have had about 4 or 5, and StarPath a few more than that, maybe 8 or 9. As you can see, Calendar FX is very busy, trades every month. And so this is just a very powerful tool. If you want a quick idea of how active one of our indicators is, take a look at this and examine it over different periods of interest, and choose the ones that seem to fit your profile, and then look for the models that are based on these indicators. All right, next one. Okay, we get a lot of questions, emails coming in about the Delta V, and it's I wanted to point out something that we all want super fast reaction in and out of the market. Buy as soon as possible at the beginning of an uptrend, sell as soon as possible at the beginning of a downtrend. And that's temptation is very real, but it's not always the best. Here's an example where lag isn't really so bad. So this is StarPath during the Great Financial Crisis. Very popular indicator that we have. A lot of people follow it. And in that 2007 to 2009 period, it had 5 round trips, actually possibly 6. I think there's a small trade there right before the big drop. So quite a few round trips. And look at the equity line there, because uh, despite all that, we did protect capital, but there was another way. Next slide, please, Tom. Okay, this is just simply Delta V, one trade. The equity line pretty much ended up at the exact same place. Missed out on most of the drawdown, missed some of the rebounds, but at the end of the day, we had essentially the same final result without all the unnecessary trading. All right, next one. And so one of the things we're experiencing right now is a significant rebound while Delta V is negative. And of course the temptation is Delta V is wrong. I'm going to override it. I'm going to just go ahead and trade. I'm not ready to declare that the long-term picture is healthy yet, and I'll show you why at the end. But here's an example from 2022. The gray line there that's circled, that's the S&P 500. So Delta V went negative at a bottom. The market rallied all the way back to almost to where its high was at, and then it began to weaken and fall off. And so this is an example of people, and the emotions were the same back then. Something's wrong with this indicator. It's not working right. Look, we're all the way back to new highs, and it's still negative. What's going on? But ultimately, I think it's safe to say that that was a good trade. Next one, please. Similar situation in 2015. It went negative. Market bounced almost back to, or actually past where it had been before. Sold off again, bounced again, and there's several of these examples where Delta V went negative. It is a long-term secular bull and bear market indicator. Secular meaning many months to years. So once it flips, it generally maintains its status for at least a few months at the minimum. All right, next one, please. Similar situation here in 2011. Got a double bounce. However, it returned in each bounce. It returned almost back to where it had exited. Now this one is actually showing that the market did continue to rise after the second bounce. But that first bounce, it did come, and that was over a few months, did return to the lows that it had seen before. Next one, please. All right, and finally, and I think this is the final one. In 2008, we see, again, market hit new highs, or at least match the old highs. Return to the low level again. Then it had a second bounce, same thing, return, and then the third bounce is where it ultimately failed and really gave up quite a bit of return. Next one, please. So this is just something I found interesting. Our gut instinct is usually wrong, especially in trading. This is Google search trends on the left. And this is a great tool to use if you ever want to dive deep into sentiment. Just put whatever search terms in that you're interested in, and it shows you the popularity over time. The bottom is the search trends for inverse exchange traded funds, and the chart on the right shows the S&P 500, and that the day where the peak is that I've circled is is that final green candle at the very bottom where I have the up arrow. So right as everybody presumably was searching for inverse exchange traded fund because they wanted to invest in it, right when they that day was basically the day that the market began to rally a 13.85% rally in 2 days. So all those people that went inverse at that point, assuming it's 2 times, immediately were hit with about a 26% loss on that trade in 2 days. The next one in the blue is leverage. And that date was on the day of the 12% rally that we all remember so well. And following that day, the market dropped 7.3% over the next few days. So now they're sitting on a 14% loss after their 26% loss, assuming that they were whipsawed like that using leverage. So just something to keep in the back of your mind, that the market almost always does the opposite of what we feel like it should do. All of us at Sherman included. Next one, please. This is one thing to think about. So I've showed a lot of positivity, especially in the short term. Now it's something I'd like to show a combination of something that's is a little bit concerning on the radar screen. The yellow line, the chart is showing the SP 500, the SPY. The gold line is obviously gold, and the green line is dollar. If you start off with the right-hand chart, 2008, you see the market rallied up, did a double top, and then started to weaken. At the same time, gold was rallying. At the same time, the dollar was declining. The market bounced, and gold fell with it. But ultimately, this did not turn out as we all recall. This was the very beginning of the first bounce, where ultimately it went on to drop 56%. Today we have as of yesterday's, or I guess Monday's market. No, the market was closed on Monday. Anyway, that was from yesterday, 27th. I made the chart on the 26th. What we're looking at here, similar situation, a rally in gold, a drop in the dollar, a double top in the market with a rebound. So that's kind of, I think that we're positioned okay the way that we have most of our short and intermediate term indicators that are long the market, but our main bull bear indicator, the delta V, still being negative. I think the environment is still suitable for a mixed indicator, mixed group of indicators. I'd be a little uncomfortable if all 100% were long right now. So I believe that's it, Tom.
Excellent. Thank you, Tony. Okay, Sam, I'm going to hand over to you. I'm going to stop sharing so that you can pull up your screen.
Sounds good. Thanks. Send request. Okay. So as of this last week, we've enabled a chat feature, a command module, specifically on the indicators and rankings page. We'll program it to show up no matter what page you're in, but it's this little chat button in the bottom right of your command module on the indicators and rankings page. And currently what we have it set to, unless I'm online and live in the chat, if you have any questions, want to provide feedback, want to schedule a meeting, you can come in here and create a chat, and then provide some feedback, ask a question. For instance, if you need to schedule a meeting with me, you can just type, can I get a meeting scheduled with Sam? And then it'll respond back with my meeting link. You can then click on that and get my my calendar and availability to schedule at your convenience. Otherwise, let's see. Let's do another question. If I was to do When will the delta V go positive? Let's see. If I'm not there online, then it'll ask for an email, and then I'll be able to reach back out to you and respond to your question. So Sam at ShermanPortfolios.com, and there you have it. So that's the chat function at this point. And so definitely use that. I'll be monitoring that every day, and look forward to seeing you on there. That's all I have today, Tom.
Could you just pull up also, I know that Tony was mentioning the timeline, and so I think you were just going to show
Can't hear you.
in the toolkit the timeline. Let's see. I can also pull that up for you.
Are you done?
Do you guys hear me still?
Yeah, I can hear you just fine.
Okay. I'm just going to really quickly show you guys. I know Tony was kind of talking through the indicator timeline, and so I'm just going to very quickly pull something up here so that I can show you that. And there's a couple of things that I want to note on here too. First, what you're looking at here, it's by default, it's collapsed, and so you may not have seen it. You may have been looking for it in the past. Whatever you pull up on here, you can come down here to the SPL exit strategies timeline, and that's where you can expand that. And that's where you'll see, if you do hover over them, you're going to get more detail, indicator by indicator, which is obviously incredibly powerful for you to see. You may want to change the timelines if you're looking at something like calendar effects, because as you can imagine, calendar effects over the last 24 years is going to have a lot of in and out. It's going to be difficult to see that. And so as you do come in here and start changing these dates, whether you're doing, let's just say, the last couple of years, you're going to immediately see everything change, and that's when you're going to see these timelines also change with it. So whatever date that you pick at the top here, and obviously you're picking a full month at a time, so January 24th through May year to date, you can then come down here and you can see exactly what these timelines would have looked like, and you can download that CSV too. So that'll actually give you the dates of the ins and outs, which is powerful too. Tony also mentioned not only looking at these indicators and the timelines, but then kind of aligning yourself with models that make sense for those. And so one thing that I'm not sure if you guys are using or not, but you can come in here and not only can you search by the models that you might want to look at on the model detail page, if you change to a sortable table, these are options here, so you can look just by the the clickable cards. But if you sort it by table, you can then decide, actually, I only want to look at something that's going to include the delta V. And so then anything that you click on that's delta V, it's all going to be included here in the models. The same is true if you only want to look at something with StarPath, you could look at something with just StarPath. And you can go down the list if you want to look at something only with calendar effects, and that's going to filter out really quickly things that you may want to see or not see, and it'll give you an idea of leveraging inverse too. I know that's often a knockout factor for some portfolios. A couple of things I want to note on some of the marketing updates. I've had a few calls recently, and I'm not saying that anyone on this call is doing this, but I've had a number of people call, and they may not know where the webinar videos are, or maybe some of the downloadable PDFs that they've been looking for, any kind of assets like that. The marketing tab continues to get built out. You may have not met Jackson yet. Jackson's on the call here. Jackson is part of the marketing team and is developing different assets and videos. And so anything that you may want to see, we are still releasing videos around the indicators and how the indicators work. As you can see, there's already 3 of those up here. So if you do have questions on the indicators, there may already be a video for it. Various questions on some of the assets, we may already have something that's in a PDF form. As always, please feel free to download and use it. It's been through our compliance department. I know we've said this a number of times. It's been through our compliance department. That doesn't mean it's approved necessarily from your compliance department. And so please, obviously, if you're going to share that with retail clients, make sure you just at least send that through so that you can put your disclosures on it and you can have your oversight look at that. But we're continuing to put videos on here. In addition to that, I do want to mention a couple of kind of exciting things that are coming. The first of which is that Sam and Jackson are working together to kind of put together some of the videos that you guys have asked for as it relates to how to use the tool in a more deep dive sense. So the indicators and ranking page, the portfolio toolkit, and the model detail pages are kind of some things that we're attacking first, so that rather than you guys feel like we've chucked you in at the deep end of a pool and given you all these tools, we're also kind of walking you through how to use them as well. We do continue to invite you to reach out to us and have very specific questions that we want to answer. Obviously, the monthly webinars are a great option for that, as is now having a chat feature that you can contact us, and you know, we're going to respond to you as quickly as we can on that. Obviously, a chat feature, we expect an immediate response, and so we hope to get to that point. As of now, it may be an email exchange. But nevertheless, we are going to be putting together these marketing tools and assets for you so that you can, whether or not you can reach any one of us on an immediate basis via phone or email, you're going to have some on-demand content that you can then watch through and really deep dive. You know, the beautiful thing about an on-demand video is that you can follow along with it. You can press play, watch the first 30 seconds, press pause, complete that task, or look at how that thing was done, and then click play and continue through it. Some exciting enhancements too coming around the command module is that we are going to continue to develop some of the automations around signal notifications and even trade notifications too. So kind of stay tuned on that. That's something that's coming over the coming weeks and months, but we want to make sure that not only are we letting you know when indicators change from positive to negative, vice versa, but what's affected by that, and give you kind of a deeper insight into what models have been affected and what trades might look like with those changes. And we're going to kind of change a couple of things here too, to try and incorporate the ability for you guys to sort of pick and choose, right? Choose your own adventure, so that once you are logged into your command module, there may be some things that you're not as necessarily bothered about seeing. Perhaps you don't want to see calendar effects, ins and outs. You don't want to see things as it relates to AstroChain energy or gold. And so we're going to try and make it a little bit more customizable for you so that you can select what it is that you want to see as those things change in and out. I do see people already starting to raise hands, so I'm going to go ahead and stop this here so that we can jump into some of the questions with you guys. So Randall, I'm going to give you the floor if you want to go ahead and ask your question.
So can you hear me?
We certainly can.
Okay, great. So I was just wondering, in the past, the Starflux, which when I was using it originally, I think it was called the Shermanator or something like that, if I'm making sure that's the right one. We primarily use that to have, if we had cash, we use it as a tool maybe to deploy cash. What else is that particular tool used in conjunction with any of the other models?
Yeah, good question, Randall. The Starflux is used in long cash, sector cash, and also as part of Harmony. I'm not so sure I would still use it as for cash deployment because it was designed to be not as Shermanator had a lot of trades, if you remember.
Yes.
It was pretty active, and Starflux, and actually that was a lot of advisors told us that it was too active for most of their clients. And so Starflux I designed it to slow it down a bit while still retaining hopefully most of its trend identification qualities. You could still as far as cash deployment with new cash, that's tricky because we don't really have anything specifically. That wasn't actually the original intent of Shermanator either. Yeah, well, I wish I could give you a good answer for that. Maybe waiting for calendar effects trades and then deploying it at that point. That's frequent, and those tend to be good times to deploy new money. So that's what I would suggest right now. But
Tony, thank you. I was afraid I wasn't using that tool properly. I have used the counter effect in lieu of that because I didn't understand how to use it very much, but I thought maybe I was missing something. Definitely the star path, definitely the delta V, but those are the two primary I'm using. Thank you.
right. Yep. Thank you.
Thanks, Randall. I'm going to also obviously invite anyone who may have questions to type in questions too. I know we've already got a few people asking questions there, and there's some answers that are happening. So please feel free to jump in there or raise your hand. So we're going to give it a minute or so here for people to jump in. We had a question from Andy Palladino around these slides being hard to see, they're too dark. So we'll take that into consideration because obviously we want to make sure that these are advantageous for everyone. And you know, you're going to join a call, then we want to make sure that you're getting the most out of it. So we can look at making some adjustments there to that. Randall, you know, obviously your question was answered live too, so no need to go through that again. I'm not seeing any more questions coming through on the chat, and nor am I seeing any raised hands. So unless I see one going twice,
Paul has got one.
then oh, let's have a look. Okay, Tony, would you like to answer that? So Paul is asking what triggers a breakaway stock in the market.
Sure. Yeah, it's the breakaway rules are that Delta V and StarPath both have to be long to be in breakaway and to be in the momentum stocks, and that makes sense to me because momentum stocks can be so volatile that we really want to reserve their use for when the market is in a confirmed uptrend. And right now it's and even though it's been basically a straight line up, I don't feel that it's a confirmed uptrend just yet. And all that volatility that we've seen to the upside, as we've seen, can very quickly be volatility to the downside as well. So it needs to be both Delta V and StarPath to be positive.
Okay, well, it looks like it's gotten quiet, so we're going to go ahead and end the call here. As always, this is recorded, so it'll be on the website here in the next couple of days. Until then, we'll see you next month. Thanks so much.